Good morning and welcome to Stock Market Today. It's Thursday, September 5th, 2019, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show, as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities closed higher in Wednesday's trading, ending near the best levels of the day. Treasuries were mostly stronger with the curve steepening. Dollar was stronger against the yen, but lagged the euro. Gold finished up 30 basis points, and WTI crude saw a big rally, settled up 4.3%. All sectors finished higher on the day, led by technology as geopolitical concerns eased, with Hong Kong withdrawing their extradition bill and the UK passing a deal that could avoid a no-deal Brexit. And as we get to the desk this morning, futures are following through to the upside, up 90 basis points, adding to yesterday's gains. Asian markets were mostly higher overnight, led by Japan, which rallied by more than 2%. European markets are seeing good gains as well. Treasuries are weaker across the curve. 10-year yield back above 1.5%. 30-year yield back above 2%. Dollar is stronger versus the yen, but weaker versus the euro. Gold down 80 basis points, and WTI crude is flat after that big gain yesterday, up about 10 basis points on the day. So let's take a look. We are testing the top of the range, and futures are actually pushing through the top end of the August trading range as of the recording of this show. We move our support level up today. Support now in the 2850 to 2900 zone. Resistance remains in that area between 2950 and 3000, which based on the futures this morning, we are poking into in early trading. RSI back above 50. That's an encouraging sign, right? We want to see this RSI shift to confirm strength in the market. If the market continues to move higher, we want to see this RSI continue to shift into bullish ranges. So far, we have a positive here with the higher lows in each of these successive drawdowns for the market as we continue to hold support. Now, what I want to see is a move and a sustained move above the 50 level, 40 level as well, to give me confidence that momentum is behind the strength in price. But what is behind the strength in price right now is Chaikin money flow, which is now on the verge, if we drew this line, of breaking that downtrend line that we had highlighted earlier in the week and late last week. So indicators starting to move in the right direction. Futures have the market moving top side of the August range. So we'll continue to focus on the leading areas of the market, but we do have the potential for a break out of this range. And should that happen, I think we have to start thinking about the top end of this resistance zone, 2950 to 3000. Taking a look at what we're talking about in our note today to Chaikin Analytics clients. Stocks rally on easing Hong Kong and UK tensions. All sectors advanced, led by technology. Breadth metrics in the U.S. continue to improve, and we do have new highs for the advanced decline line. Aerospace and defense is on the verge of new highs as well. It's a group that we've been bullish on, and we remain so. And as we said, futures do point to a higher open here today. Now, we've had a nice shift in some of the power bars for the major indices. The Dow adds nearly 1%, and we're back to even. 5 bulls to 5 bears for the power bar ratio for the Dow Jones Industrials. S&P 500 adds more than 1%, 84 bulls, 93 bears. NASDAQ back to even following their big outperformance yesterday. 21 bulls, 21 bears. Small caps, actually an underperformer on the day. Now, they added 80 basis points, but they underperformed the S&P 500 by 31 basis points. Still skewed bearish, 370 bulls to 390 bears, but an improvement. Bonds actually uptick with the rally in stocks, but as we said earlier, they are giving some back today. Comm Services had a nice day as well yesterday, up 1.94%. 7 bullish or very bullish stocks in that group, 3 bearish or very bearish stocks. Now, we've been highlighting it in our sector work on Tuesdays as being in a trading range. So let's start to look for opportunities should that range bust to the upside. Comm Services is an interesting group with both offensive and defensive properties. According to the Chaikin Power Bar, small cap stocks and large cap stocks are still somewhat bearish. Major markets across the board are mixed. Our stock of the day today is AK Steel, AKS. Now remember, this is auto-generated by our algorithm based on the power gauge rating. We run through the analysis here, and the first thing we're going to call out is the fact that this is a $2 stock. If you're not somebody who trades these lower price stocks, well, this can still be informative because we'll walk through the process and you'll see the process that we go through every day. It's repeatable. We don't change it, right? We like to stick to the same process for analytical rigor. AK Steel, AKS, has a very bullish rating due to very attractive financial metrics, very strong earnings performance, and strong price volume activity. So very bullish stock, strong trend, strong industry group, but two legs to the stool, right? Market and model have to be in agreement. Right now, they are not. Our very bullish rating is met with a stock that's been a pretty steady underperformer and actually starting to see the intensity of its underperformance pick up of late. Chaikin money flow turning bearish. Now, we are above the declining long-term trend line, but there's enough here to keep us away, right? So even assuming you were somebody who looked at $2 stocks, this is not necessarily the setup that we like. Even if you don't look at $2 stocks, the analytical process remains the same. And when we have a very bullish stock, that's a nice starting point, but we want to see the market and model in agreement. We want to see outperformance, and we don't have that here with AK Steel. Stock is oversold based on our indicator, but money flow is bearish. If you trade the low price stocks, you can put it on a watch list. But for me, AK Steel, not interesting at this time. Taking a look at our sector tracker now. Looking at the movement of the major sectors over the last 5 days. So as the market's moving top side of the range and now on the verge of breaking out, we still have a defensive feel at the top of the list. Real estate and utilities, top two sectors over the past 5 days, largely a function of declining yields. Now, we talked about yields yesterday, and how we said the path of least resistance still remains lower, but that we're not likely to go there in a straight line, obviously. We could see a backup in yields. Maybe that's starting to happen today, but either way, REITs and utilities still two of the leading sectors of the market, both on a short-term time frame here, 5 days, and on a longer-term trend perspective. Materials is a group that we've been warming to. We've been highlighting it. We've been highlighting especially the precious metals, but we want to see continued improvement across the group. There's your comms doing well. Energy, tech, and industrials are middle of the road still, though energy fundamentals are bearish. We looked at services yesterday. We'll look at EMP in just a little while. Financials, discretionary, staples, and healthcare at the bottom of the list. But again, for the third day in a row now, all of the major sectors are higher over the preceding 5 days. So as we start to look under the hood, we start to see why the market could sustain a move out of that August trading range. Let's move on now to our industry in focus, oil and gas exploration and production. Over the past 6 months, it has underperformed the S&P 500 by 33%. And we think that that outperformance is likely to continue because the power bar ratio, which measures future potential, is very weak. 29 bearish or very bearish stocks, only 6 bullish or very bullish stocks. It's currently ranked number 19 of 21 subsectors. Remember, yesterday we looked at the services names. That was ranked 21 of the 21 subsectors. Indicative names here that you want to avoid or potentially look for bearish opportunity: Cosmos Energy, KOS, Continental Resources, CLR, and Noble Energy, NBL, all have very bearish Chaikin power gauge ratings. Let's take a look at the group now. XOP, the ticker symbol that represents EMP stocks, and it has a bearish Chaikin power gauge ETF rating, and the trend is weak, as we can see below a declining long-term trend line. This stock's been underperforming the market since last October, so nearly a year of underperformance. And really since November, the power gauge ETF rating for the fund has been predominantly bearish. Bearish money flow persistency across the board indicates that the group just continues to be under pressure. So when we look, if this was a stock, we would call it a Chaikin Classic Bear. It's an ETF, and it's still bearish. The analysis remains the same, continues to be a group that we want to avoid. For those of you who read my market survival guide on Tuesdays, you know that I've been bearish on this group and remain in that camp until the weight of the evidence supports not being bearish. Taking a look at yesterday's trending names now. Yesterday's S&P 500 movers and shakers. CEO of PVH buying stock. That juices it 9%. Didn't see any real news on FLR to send that stock higher by more than 6.5%. IPG, supplier to the Apple chain, the Apple supply chain, rallying as Apple announced a new cheaper iPhone. Foot Locker rallies 5%. Didn't see any company-specific news there. Tapestry rallies over 5% as the CEO is stepping down, and they reiterated their fiscal 2020 guidance. Stock higher by 5%. Tyson lowered their guidance 7.75%. Now, this had been a name that we had liked in our market survival guide. We'd been moving our stop up along the way. It was a nice idea for us and sticking to a rigorous discipline process. With Breakdown yesterday, we took it as an opportunity to remove that as a bullish idea. Ulta following through to the downside following their dismal report last week. INSEE caught an upgrade to send that stock higher by 3%. FTV splitting up the company lower by 3% on the day, and Humana, nothing company specific, but all the managed care companies were under pressure yesterday. Humana down by 2.2% on the day. Now, taking a look at market breadth, new highs for the advanced decline line. We've been highlighting this a lot lately in our notes and on our calls, because we've been saying that a break to new highs increases the odds that the S&P 500 will resolve this consolidation to the upside. And we've also been pointing out the fact that as the index has been trading below its May highs, this metric has not, right? It's been holding, right? So breadth has been there. Participation to the upside has been solid. Now we have a breakout that obviously, if you believe our thesis, increases the odds that the S&P 500 does the same. Is it guaranteed to happen? Absolutely not. But if we're looking at breadth is certainly improving, and it's not just here. It's across metrics, whether it's percentage of stocks above their 200-day, above their 50-day, or like this, percentage of stocks and short-term trends improving. What we're looking at here is the percentage of stocks in the S&P 500 above their 20-day moving averages. Now, for the past few weeks, we've been highlighting this bullish divergence. As the market has remained in that August consolidation and testing lows, this metric has actually been putting in higher lows. This is what we talk about. This is what we mean when we talk about a bullish divergence between price and an indicator. And we've been highlighting it for the past couple of weeks, saying it points to potential upside. Now, the S&P 500 has moved back above its 20-day moving average, so still very short-term in nature, but back above that short-term measure of trend, and the 20-day moving average is beginning to move higher. At the same time, the number of stocks above their respective 20-day moving averages has now clipped the 70% mark. So short-term breadth moving in the right direction, advanced decline line breaking to new highs. Breadth increasing the odds that the market does resolve to the upside from this August consolidation. Now, one of the names that we've liked and that we continue to like, one of the areas of the market that we liked and continue to like has been aerospace and defense. Taking a look at ITA, the iShares Aerospace and Defense ETF, you can see that after breaking above the highs from last year, we consolidated a bit, and now we're on the verge of moving topside as we've held that support level above a rising 200-day moving average. And now look at how throughout the consolidation, the RSI has held bullish ranges. This is what we're talking about for the market when we say we want to see the RSI move higher and hold bullish ranges to lend a momentum confirmation to what we're seeing in price. This is a great example of that. We're starting to see a momentum confirmation for ITA to this recent price strength, as pullbacks cannot push the RSI much below 50, if at all. That's momentum confirmation. And we'll notice, too, that on the August pullback, the RSI did not become oversold. On a relative basis, ITA in a nice uptrend near, again, on the verge of new highs relative to the S&P 500. So this is an area of the market that we want to continue to focus on for bullish ideas. Now, what I will say is if we drill down on the holdings of ITA here at Chaikin Analytics, it's kind of interesting to me. We have our signals, our buy signals, and actually 3 of the names that are holdings of ITA triggered buy signals today, including L3 Harris. This is a name, recent merger between L3 and Harris. LHX, the ticker symbol there, bullish rating, outperforming, strong industry group, right? Market and model are in agreement. Stock is oversold with bullish money flow and triggered a money flow buy signal today. I'm featuring this stock in my note as my bullish idea of the day, and I think it's worth a look for investors looking for exposure to a leading stock and a leading industry group. That's going to wrap it up. Head over to ChaikinAnalytics.com/today to sign up for that email. I'll be back here tomorrow.